Abouts. And so what catalysts are you specifically tracking here as we go forward through the rest of this calendar year?
In the big picture here, Brad, what I am seeing is what an incredible tribute to American optimism. How we got here from where we were is absolutely incredible. Think about when Barack Obama left office, we were around 19,000. We had huge increases during the time of the Trump administration. The rug gets pulled out from under us in March. We lose all those gains for over 3 years, back to 19,000 or under that. And then to hit 30,000 at this point, who could have imagined, just 6, 7 months ago that we would be in this situation? So it's a tremendous story. I think it's a great story, particularly as to where we are. Going into the holiday season, we're seeing the talk of lockdowns and other news items that perhaps are not so great in terms of us being social beings, and we're going to kind of be locked down a little bit. But to have this going on right now is just tremendous, Brad. I think it couldn't come at a better time.
Okay, and so I want to talk about something in that we've been framing as R&D Mondays has essentially become moving away from the M&A Monday moniker that we know had been attached and annexed for so long, specifically around the vaccine news that we've seen. The markets have latched onto that. They've also latched on to any positive announcements that we've seen from President-elect Biden's cabinet and those who he's choosing to fill key roles. A much more seasoned position going into the Treasury Secretary role, as we know and are expecting, in former Fed Chair Janet Yellen, that contributing to some of the gains yesterday and permeating over into today. What specifically are traders watching, and what the future of a combination in economic and monetary policy, fiscal policy, could look like when you do have some of these new cabinet members step into play?
I think we're seeing two things happening right now. First, vaccine news. First and foremost, Brad, I think where we're headed in the efficacy of the vaccines that are really just around the corner, and not just that, it's also about the ability in the supply chain to get these vaccines out to everyone. And I think the market is looking at that and saying, great times ahead. Now, as we shift to the political front, which is just important, we are seeing Joe Biden essentially saying, we're going to put the old band back together again. We're seeing familiar names like Janet Yellen and John Kerry. These are names that are not going to shake people up too much. We're talking about experience in Washington, and also these are names that are not going to get progressives too upset or the ultra conservatives too upset. So Biden is playing it down the middle. That's what we're expecting. And as far as expectation, I think the market likes seeing those familiar names and the predictability of what is coming with a Biden administration. I think after 4 years of Donald Trump and somewhat of volatility related to his personality and the people around him, it's quite a change. And I think it's a welcome change in many ways.
Yeah, it's remarkable that markets would be signaling that experience matters, especially after signaling previously some of the contempt for a quote-unquote business-minded professional going into the White House. But as we continue to think about this transitionary period, there still lies ahead a lot of unanswered questions, and particularly around what the rollout for the aforementioned vaccines would look like. And so the markets are clearly looking ahead to what potential date. How are you pricing that in? Is it first quarter? Is it second quarter, first half, basically, of 2021? And how are they evaluating exactly when the economy will start to reopen at full capacity?
I think once we get into the first quarter of 2021, we're going to see things jumping right away, because the projections are, as we get into late spring or early summer, that we are going to have potentially 70% of the U.S. population vaccinated at that point. That gives us the equivalent of herd immunity. So as we first start to roll this out in January and hopefully earlier, Brad, we are going to see things, I think, really surging, because that's what's holding us back. Think about this, how this market has reacted. It wants to go up. When it seemed some months ago Joe Biden was going to win, the market starts going up. Then it seemed like Donald Trump was coming back, and the markets went up. And then when it appeared that Joe Biden would in fact win, the markets go up again. So clearly the market wants to go up, but the certainty of a vaccine in at least the first half of 2021 is big news, and I'm really expecting some really great things to happen on Wall Street in the first half of 21.
We see record closes, record highs for the Dow and the S&P 500, Russell closing at a record as well. You got to wonder, though, with some of the reopening that we're going to see even future out, 6 months out, 8 months out, whatever that looks like, that could indeed put a hit on some of the at-home stocks, stay-at-home stocks that we've been talking around, some of the pandemic plays, if you will, that investors have added to their portfolios. Do you expect a hyper-rotation out of that, or would you expect that they continue to hold on to some of those names in the interim period, as we are still seeing some of the daily new coronavirus cases topping unfortunate new milestones on that front as well?
I think we expect to see continued numbers going up related to cases of COVID. The good news is that the death rate should not be as high. So that's tremendous news. On the other hand, as it's going to pertain to the economy, I don't really expect a huge adjustment to people working remotely. I think that's here to stay. Clearly, there are going to be people going back to work in the office, so the commuting again is going to start. However, I think the new normal is truly going to be working remotely because of technology. So we are going to see some stocks related to staying at home taking a little bit of a hit. However, I don't think it's going to be terrible. I know there's been talk of like companies like Zoom that really benefited initially from the pandemic because so many people were working remotely. I think Zoom is here to stay, and that means of communication. And to think otherwise, I think, would be a little short-sighted. The world has changed forever because of this pandemic, and business is going to follow, Brad.
In the interim term, small businesses out there certainly looking for a lifeline as stimulus. That stalemate has continued in Washington, D.C. It seems like something that unfortunately continues to come up even in our conversations when we have you on to get some of your insights around the market stand. And that is still where we find ourselves without a stimulus deal going into the holiday season. And even though you are having the NRF predict that there is going to be more spending from consumers who are not traveling, you still have a lot of the small businesses that are out there that have either had to look at how long they can stay open through this holiday season, how well they can invest back into their business to even make a shift towards e-commerce to service some of those potential customers. And so how actively do you see the likelihood of a new stimulus deal as we go into the new year and a new administration as well?
It's interesting because split government in some ways is very beneficial. Even though it does cause some gridlock, it offers some checks and balances, let's say, to the extremes. However, when we are talking about stimulus, this is not a good thing. The House and the Senate are far apart in terms of the number of dollars that they're willing to allocate towards stimulus programs. I think the House is around 2.2 trillion and the Senate is at 500 billion, way off. And we're also anticipating that the Republicans are probably going to hold the Senate, which means we're going to see more gridlock. I think the answer here is compromise, obviously. But where they really need to focus in on is two areas. They need to come up with another PPP program. I think PPP was extremely helpful, although it wasn't perfect. It was done very, very quickly, but it addressed the issue of keeping small businesses open and, just as important, Brad, keeping people employed. That's critical. On the other side, we need to make sure that we're still providing unemployment benefits, because there are a lot of people out there that are hurting. And what are they doing? They're going through their savings, whatever they had. They're going to go and max out their credit cards, and they're going to tap into their retirement plans. That is not where we want people going. So Congress must act. They have to realize that there needs to be a compromise deal. What does compromise mean? It means that neither side is happy, but that's good compromise. The American people need this.
Dan, we got to leave things there on the day. Dan Geltrude, who is the managing partner at Geltrude and Company. Thanks so much for the time, Dan.